In accounts payable, best practice accounting organizations like to say a good invoice gets a good payment. But what makes an invoice good? It's a lot more complicated than it might seem. Best practice accounts payable teams look at 8 different factors. Let's look at them together. Factor number 1, the invoice is not fraudulent. Now, you might be sitting there saying, duh, of course a fraudulent invoice is not a good invoice. But determining what invoice is fraudulent and what invoice is legitimate is not as simple as it seems. We're going to talk a little bit further on about how you do that, but just know that weeding out fraudulent invoices is not so easy. And criminals have gotten really good at creating invoices that look like they're legitimate. They impersonate legitimate vendors. They know who you do business with, and they set up vendors that have similar names, and they send in invoices that look like they're good. So your team has to weed them out. Factor number 2, it's not a duplicate invoice, because if it's a duplicate invoice and it gets paid, that's a payment that you shouldn't have made, and recovering that payment takes a lot of time and effort. This has become a huge issue in recent days as suppliers take advantage of the affordability of email and the ease of technology, and many of them, in fact 25% of them, are sending out multiple copies of their invoice. So weeding them out has become a big task in many accounts payable organizations. This is why we make such a big deal about closing out purchase orders and receivers as soon as they have been processed and used, so that they don't get used a second time. It may seem like a little insignificant issue, but it's actually a huge one if you want to make sure that you don't pay an invoice twice. Factor number 3, the vendor has been set up in the master vendor file. This is important because most accounts payable teams will do several verifications related to a particular vendor, and they do this before they make any payments. And so the vendor should be set up. Oftentimes it's not. And so when the invoice shows up in accounts payable, before it can be processed and go through all the verifications and approval steps, the vendor has to be set up. And like I say, it takes a little bit of effort. It's also one of the ways that your accounts payable team is able to identify fraudulent invoices. For if a fraudulent invoice comes in from a supplier who you're not doing business with, i.e. a phony one, then they'll be able to partially figure that out, at least, because the vendor won't be in the vendor file. But remember, criminals are really good at impersonating legitimate vendors. So sometimes they'll create a phony vendor with a name that's very similar to one that you're doing business with, because they're trying to trick you. Okay, factor number 4, and this is actually part of setting the vendor up in the master vendor file, or at least it should be, and that is that you've gotten a W-9 from the supplier, assuming it's a U.S. entity. You've gotten that W-9, you've received it, and you've verified it. And by verifying it, we mean you've run it through IRS TIN matching to make sure that the data on it is accurate. This will greatly reduce the number of B notices that you get at year end when you send out 1099s. And if you just make it part of your normal new vendor setup, it's not that much of a big deal. Just a few other things. The service is the same one that the IRS will use when they are verifying those 1099s that you send in, number 1. And number 2, best of all, my favorite, it's free. You just have to sign up for it, and register. Okay, I'll stop ranting about that. Factor number 5, that invoice includes a purchase order number or the name of the person who authorized the purchase, or ideally both. Now, why do we make such a big deal about this? Because many times invoices show up in accounts payable, there's no purchase order number on it, there's no name of the person who placed the order, and then in order to get that invoice, number 1, approved, and number 2, verified, the accounts payable team has to figure out who placed this order. And sometimes it's not that obvious. Now, you would think it would be a no-brainer issue for suppliers to automatically include that information on the invoice, because after all, all. They're sending out that invoice because they want to be paid, and they should make it as easy as possible for your accounts payable teams. But many times those invoices don't have it. And of course, if it's fraudulent invoice, it certainly is not going to have a legitimate purchase order number on it. So good invoices include this information. And as a best practice, we tell accounts payable organizations, if they don't have it on, you should send a very polite letter or email with that invoice, return it to the person who sent it to you, the supplier, saying that you require this information. Hopefully, if it's a criminal, they won't try and supply it, they'll just go away. But that's not a guarantee. But it's one way to get rid of a few of those fraudulent or phony invoices. Okay, factor number 6, the invoice has been approved. So typically, invoices will come into the accounts payable team, and because it has that purchase order number on it or the name of the purchaser, the accounts payable team will know who to send it to get approval to go ahead and pay it. And once it's been approved, then it comes back to accounts payable, and the accounts payable team can then verify the accuracy of it. So no, they don't just automatically take the approved invoice back and pay it, because the approver just kind of says, yes, I ordered this stuff. But what they're not doing is checking that the invoice is correct. I mean, a few of them might, but 98% of them don't check that the invoice is correct, or sadly, they don't also check that the invoice has not already been submitted. So if it's a duplicate, they may just look at it and like, oh yeah, I ordered that, approved for payment, forgetting that a week ago they approved the same invoice. So the approval, it goes a long way to verifying that it's a legitimate invoice, but it doesn't go that last mile, which your accounts payable team will. Okay, factor number 7, and I got to tell you, a lot of people completely ignore this one, and some of them get away with it, but you don't want to be the one who doesn't get away with it. Okay, and what is that? This is that they also, the supplier who sent you that invoice is not on the OFAC list, which is part of the Department of Treasury. And this is a list of what's called specially designated nationals, of entities that the U.S. government does not want, what they call U.S. persons, includes companies, doing business with, or more importantly, making payment to. So ideally, you would have checked that the supplier wasn't on the OFAC list before you placed your order and you set it up. But Department of Treasury is continually updating this list and adding new suppliers to it, so they may not have been on it initially, but they could be on it today. Let me give you a simple example. You may remember that this became an issue when Russia invaded the Ukraine. Certain Russian entities then were put on the OFAC list, and this created a little bit of problem for a few U.S. companies who had been doing business with them legitimately. From day 1 to day 2, they went from being okay to do business with to not okay to do business with. So hopefully your supplier is not on it, and that makes the invoice good. You are supposed to, by the way, check before you make every single payment. Most organizations will check when they first set the supplier up, but not on a regular basis. But let me just say, if your team is watching the news, for example, and when we saw Russia invade the Ukraine, and they might think that something has gone on that might put one of your suppliers on it, maybe then they would have checked. Okay. And now the last, and this is the biggie, a good invoice is one that is accurate. And making sure that the invoice is accurate is a lot more complicated than it might seem. Yes, the invoice has been approved, but that doesn't mean that it's accurate. For example, the quantity might be wrong, the price might be wrong. All the goods that are on the invoice, even if they were on the purchase order, may not have been received. So your team needs to check that they were all received and that none of them were damaged. And also if there are any other special terms, like for example, if the supplier was supposed to pay for customization, maybe you ordered pencils and your company wanted its name or its logo put on the pencils, and that was included in the purchase price, you want to make sure that the invoice doesn't say customization. Or it might have said that the supplier was, for example, was supposed to pay for freight, and now they have a freight charge on it. Or there could be a million other things. So you want to make sure that the invoice is accurate. Hopefully, I'm giving you a little flavor of it's not quite as simple as it might seem. So as you can see, there's a lot of different parts to review to ensure the accuracy of that invoice. That's why best practice organizations organizations use the proverbial three-way match to do so. To ensure that our community knows all the ins and outs of using the three-way match correctly, we put together a comprehensive guide which you can watch right now by clicking on the link that has appeared on your YouTube screen and is in the description. Good luck.